Hey everyone, welcome back to Corporate Decoder, the place where we figure out what companies are really doing. Today we're diving into Kezar Life Sciences' latest 10K filing. It's a long report, so buckle up, because by the end you'll know more about this biotech company than you ever thought you would, maybe even enough to make a sound financial decision. This report is basically their yearly health check. We are seeing revenues near zero and heavy investing in research, but we will soon find out if they are making progress or running in place or running out of time. First, let's talk dates. This report covers Kezar's business up to the end of last year, December. That's when their financial year ended. So all the numbers we're about to see are as of that date. This report is a Form 10K, which is the report that public companies in the United States file annually with the Securities and Exchange Commission, or SEC. The period being reported on is for the fiscal year that ended December 31st, 2024. As of late March of this year, 2025, Kezar had about 73 million shares of common stock outstanding. This number is important because it affects things like earnings per share. If you want to check out the details yourself, this report, like all public filings, is available on the SEC's website. Okay, let's dive into what Kezar actually does. They're a biotech company working on new drugs with a focus on immune-related diseases. A key drug candidate for them is zetomipzomib, try saying that 5 times faster. It's aimed at treating autoimmune hepatitis, or AIH. In their Portola trial, they saw higher rates of patients having a complete biochemical response, which basically means their key health metrics normalized while also reducing their steroid usage. That's a big deal because current treatments often rely on heavy steroid use, which can have nasty side effects. Not everything is sunshine and roses though. Their Palisade trial, which was testing zetomipzomib for lupus nephritis, or LN, was terminated after being put on clinical hold by the FDA. They were also working on an anti-cancer drug called Kezar 261, but they stopped enrollment in the phase 1 clinical study. They are now reallocating clinical resources toward development of zetomipzomib. To help fund their work, Kezar has a licensing deal with Everest Medicines. Everest will develop and sell Kezar's drug in China and some other Asian countries. Under the agreement, Kezar got $7 million up front and could get up to $25 million more if certain milestones are hit. Everest will also pay royalties on sales. Kezar isn't the only company working on these kinds of drugs. Ipinovexpire is also engaged in preclinical research focused on small molecule immunoproteasome therapies for the treatment of autoimmune and inflammatory diseases. Kezar has a bunch of patents to protect their work, but many expire in 2034, so they need to make a move fast before the competition catches up. To get a drug approved in the United States, you have to deal with the Food and Drug Administration, the FDA. Getting a drug approved by the FDA takes years and costs a ton of money. There's no guarantee of success, and even if you get approved, there are still ongoing regulations to deal with. If Kezar ever gets to sell a drug, its success will depend on whether insurance companies and government programs like Medicare will actually pay for it. The Biden administration has pursued policies to reduce regulations and expenditures across government, including at HHS, the FDA, CMS, and related agencies. Even after a drug is approved, there are still risks. New side effects could emerge, manufacturing problems could pop up, or the company could fail to comply with regulations. Any of these could lead to big problems like restrictions on marketing, product recalls, or even the FDA pulling the drug off the market. Like all businesses these days, Kezar has to worry about data privacy and security. There are tons of laws and regulations at both the federal and state level, like HIPAA. Kezar says they are committed to environmental, social, and corporate governance, also known as ESG, which includes things like using resources wisely and operating ethically. As of the end of 2024, Kezar had 55 full-time employees. Now, let's get to the numbers. As they clearly state in the report, Kezar has incurred significant operating losses since they started, and they expect to keep losing money for the foreseeable future. As of the end of 2024, their accumulated deficit was about $434.25 million. They had about $132.2 million in cash equivalents, and marketable securities as of the end of 2024. The company believes they can fund their current operations through at least the next 12 months from the date that the financial statements were issued. Kezar has some debt with Oxford Finance. This loan agreement puts some restrictions on how Kezar can operate. Research and development is a huge expense for Kezar, costing them $65.7 million last year. They've been cutting back in some areas though to focus on their key drug. General and administrative expenses were at $23. It reflects costs from paying personnel, legal fees, and the cost of staying in business. In 2023, Kezar had to pay out significant charges, a total of $6.2 million off people. In 2024, this was reduced to $1.5 million. Looking at their marketable securities, we can see how Kezar invests their money. The vast majority is in what they call level 1 and level 2 assets, meaning they are fairly safe and easy to value. Level 3 assets have some risk, but they report 0 in that category. Scrolling to December 31, 2024 chart, $37 million is in US Treasury money market funds, about $15 million is in corporate debt securities, over $27 million in US Treasury securities, and $42 million in commercial paper. A major risk for Kezar is that if analysts stop covering the stock or publish bad research about them, investors might lose interest and the stock price could drop. Finally, like every company, Kezar is exposed to the risk of unstable market and economic conditions like rising inflation and interest rates. So what's the big picture here? Kezar is a biotech company with potential. They've seen promising results in early trials for their main drug, but they've also faced setbacks and had to cut back on some programs. They are making progress with complete biochemical response and are shifting from reliance on large amount of steroids during the treatments. The key risk for Kezar is funding. They're burning through cash and will need to raise more money to keep going. On the bright side, their licensing deal with Everest Medicines could bring in some revenue. The main issue now is whether they can actually get zetomipzomib approved and successfully commercialize it. Overall, Kezar is in a tough spot. They have some good things going for them, but they face big challenges. The stock price is likely to be volatile until they have more solid results and a clearer path to profitability. This is not a company for the faint of heart. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment letting me know what company you want me to decode next.